today with another stock analysis. Today we'll be looking at Photronics Inc. So they essentially make microscopic electric circuits. I believe this is fairly closely related to the semiconductor industry, or just small electronics as a whole, but very small company, definitely looks very promising, a ton of growth recently in their stock price. So definitely something worth looking into. So if you're interested, make sure to subscribe. If you haven't, I make these videos every day of the week. Also, comment below any companies that you are interested in that you'd like me to look into and review. I love taking suggestions from my subscribers, so make sure to do that as well. And let's get into Photronics Inc. So starting off with Photronics, we could see they develop photomasks, which essentially are pieces of electric circuits for use in integrated circuits and displays. So most likely a very specialized company, definitely a very high degree of manufacturing. And looking into some key stats here, market cap is at 1.5 billion. So this is a very, very small company. And remember that number because later in the video, I'll tell you why that is so important. Target price is currently at $35 a share, and right now we are at 22. So there is a ton of potential upside there should that target price be realized. So now looking at their chart, you can see they have very closely followed the overall performance of the market. However, right now they are nearing a point where they're essentially more at market value instead of being appreciated from that. So could be a potential buying opportunity just based on using this area as a support. So definitely very interesting for the short term, possibly trading. Looking into their growth summary, we could see very steady estimates across basically everything. Other than some short-term metrics, we are seeing very steady growth across every single metric here. 10 years, 6.6% sales growth. Seems like it's on the lower end, but overall that's a really solid number to attain over a 10-year period. This is a yearly growth percentage as well, so overall it's pretty solid. Also, free cash flow being at 38% is massive. That is hopefully attainable. If we can see that, that would be huge. But either way, let's get into their financials now. Once I'm through with the financials, we will be going over their recent earnings, a little bit into their chart, and I'll also give a bit of a valuation for the company as well based on their competitors. But anyway, looking into their income statement here, we could see they did take a slight dip in sales in 2024. However, one thing I do want to point out here is that that also came with an increase in profitability year over year. So while they did lose their sales, they did increase their operating capabilities and they did improve their profitability. So while that is mixed, there is a positive aspect to it. But overall, it looks fairly solid here. And we can go into their quarters and look at how 2024 went for them. So you could see their sales were pretty steady. Actually, their final quarter did see a slight uptick in their sales activity, which is good. Overall, net income stayed fairly consistent, right around 30 million a quarter. And I do think there is definitely a lot of growth that can be seen from this company. And one thing I will actually go into is their supply chain, where we can see some of their customers. So there are some fairly big customers here. For example, Samsung is one of their major customers. United Microelectrics, that is also a fairly decently sized company. Semiconductor Manufacturing International is a Chinese semiconductor company, and they are also fairly large. So I think there is a lot of potential here for expansion in the future. But anyway, let's get back to the reports. We can see their total shares here have been very, very slowly increasing, which isn't anything too major. They are diluting, but overall it's a very small amount, so it shouldn't be anything to be concerned about. Looking into their balance sheet now, we can check how their asset growth has been doing, and seeing this, it does look fairly decent. Let's go back out to the years so we can get a better picture of how this growth has been progressing. So we have seen consistent asset growth every single year from them, especially recently where they've really ramped it up, going from just over $1 billion in assets a couple years ago to now almost $2 billion in assets. So everything there looks fairly solid. They have a decent amount of cash and very little debt. Only about 23 million total in debt compared to their 640 million in cash. That is fantastic. puts them in an excellent position for the future to hopefully fuel a lot of growth, which is what we're hoping to see here. And now let's move right along to the cash flows and see what we're getting into. So operating cash flows look fairly decent. Nothing too major here. They have been increasingly positive over the past few years, consistently over 250 million per year. If we get into their quarters, we can probably see that as well. They have been fairly consistent, and we actually saw a bit of a decrease towards the second half of this year. However, that's nothing too crazy, considering just a year ago they had a quarter where they only had 27 million in operating cash flow. So overall, this isn't anything too major. And it looks pretty solid, to say the least. Investing activities also look fairly consistent. We could kind of see some mixed buying and selling of their assets recently, but nothing too major. Financing activities, we can see they have been paying off debt for the past 3 years. And again, they have barely any debt. So just the fact that they paid off everything they had or nearly everything they have is a pretty good sign. And also, you can see that slight dilution in the stock I was talking about earlier. Really nothing too major. They also, a couple years ago, were repurchasing a fairly decent amount of their stock. So really, the stock that they're issuing recently means very little. There's very little weight to that at all. And looking into their free cash flow again here, very consistent for the past 5 years. A decent amount of increases. However, we did see a decrease in 2024. Which again isn't anything too major. There's always usually circumstances that cause those fluctuations, but overall, seeing that it is consistently positive and also having 130 million in free cash flow for a $1.5 billion market cap company, those multiples are actually really, really solid. And I did say I would get back to the market cap later on. They have, if I go to the years, they make 866 million in sales per year, and their market cap is at $1.5 billion, which generally those kind of ratios mean that the company could be very significantly undervalued. If their sales are similar to their market cap or even close to it, it usually means, especially in a high growth industry like this, where they have huge customers, they're involved with some massive companies like Samsung, there is a ton of potential here to hopefully have some very, very large growth. So anyway, going into the ratios now, we should get a pretty good idea of how they've been doing. And one thing to note, which I did mention earlier, is that increased net margin in the past year. So although their gross margin fell, their operating margin fell, they are making more overall profit. And also both metrics are above their 5-year average. If we look here, we could see they have significantly surpassed it for 2024. So in general, they are performing very well, which I think is definitely something to be impressed with and also hopefully have a lot more potential in the near future. And one other thing is, again, their debt to equity. They have very little debt. Even on average, when they did have a little bit more debt in 2021 and 2020, they were still in an incredibly healthy position. So being under 0.5% now, basically a 0.25% debt to equity ratio, that is nothing. They're in a very healthy position with their current debt load. So now I think we will go into a bit of a valuation, or you know what, first we will go into a little bit of their earnings. So this is a report from their last earnings, just showing some metrics. So their quarter four report of 2024 came in 6 million above estimates, which is actually 4 million above estimates, which is fairly solid. They also released quarter one guidance for 2025, and we can see it is fairly positive here. Just about coming in line with estimates on EPS, and their revenue is actually a bit on the higher end of their estimates, which is almost always a very positive thing. So now moving into a little bit more details, we could see we have full year fiscal 2024 results. There's also fourth quarter, which I won't get into too much. If you want to read through this entire report here, this is basically everything. Everything else is just the hard numbers. But if you want to read through the whole thing here, feel free to pause, but I'm going to look through the full fiscal year. So revenue was down 3%, which we mentioned. Net income attributable to shareholders was 130 million compared to 125 million for 2023. Attributable to share non-GAAP income was 127 compared to 126 in 2023. So slight increases there. IC revenue was down 2%. FPD revenue was down 5%, which I'm assuming these are their products or their business segments. And then cash generated was 261 million, and cash invested in organic growth was 130 million. So that's honestly a fairly huge number that they are reinvesting into the growth of their company. I think that's very positive. And yeah, overall, everything there looks okay, other than just the decreases in revenue. But again, they did surpass their estimates, and I think they have a fairly good position to increase their value in the future. There is also a comment from their management here where we could see sequential revenue growth in the first quarter with increased sales in their integrated circuits and flat panel displays, which is what we saw fiscal year being down in sales. Driven by strong high-end sales, particularly in the US, while FPD was led by mainstream demand. Photomask demand trends were favorable, and we are cautiously optimistic that the trends will continue in 2025, driven by AI, supply chain, and edge computing. So overall, every single major trend that is happening right now, this company is positioned to where they can definitely benefit from it. Obviously, AI is probably the biggest thing on the market right now, and this company is definitely something that's related to it. Supply chain is always a huge topic in basically any kind of global market conversation, and they believe that they are positioned well to benefit from that. And either way, the company seems like they're very optimistic for themselves, which is always good. I am partially optimistic for them as well, just based on where their own valuation is. And now let's get into some competitors and see where their valuations are. So I'm hoping we have a couple, and actually we do. We have a lot of different ones to go through. Hopefully, once the valuations pop up, we have a decent amount, which we do. Okay. So PE ratios, I'm going to go with the fiscal year 2 right here and do 16.84 and 14.74. So let's get in here. PLAB, wait for that to load. 16.84, and let me just double check, 14.74. So that gives a current valuation of $33 a share based on the price to equity ratios of their direct competitors, which is a fairly large increase from their current price of $22.60 a share. So overall, I think there is a ton of upside here. And we also saw that in the FactSet estimate here, target price is at $35 a share. So that does hold up fairly well. And honestly, I just think there is a ton of potential upside here. And we can see they have had a very strong uptrend recently, just constantly making higher lows off of each other than one specific time where they didn't. But overall, they are just very strongly uptrending. There was a fairly large spike a couple of weeks ago that actually this was a year, or not a year ago. This was 2 months ago now, but there was a fairly large spike, which they are now gathering support from. So hopefully we can see the price return to this higher range, just based on the fact that they're kind of nearing that very high demand zone again. And we saw the last time they hit that demand zone, which is right here, they increased fairly significantly over the next few days, 10%. 3%, and then another 5%. And this is over the month following the drop back down to that range. This is on a weekly time frame, by the way. So honestly, I think there is a ton of potential, especially where the price is right now. I am considering investing myself just based on where the price is and where the valuation is. This seems like it is in a very good position. And just with their recent earnings being fairly optimistic, fairly positive, I think there is a lot of benefits to checking out this company more. So that's all I have for Photronics today. Make sure to research this more if you're interested. Feel free to subscribe if you want to, and I will see everybody in the next video. Thanks for watching.